Okay, so thank you everyone for being here, and again, thank you for David and Anka for setting up the event. It's so much work, you guys don't know, and I'm really, really appreciative. Now, today I want to talk or work with you guys on um, on your self-talk, the power of your self-talk. Because what I see with almost every trader, we have this amazing tool, our body. And yesterday I was talking about our nervous system, which is quite a new topic for me, and how we can use our nervous system to our advantage to work less hard, but work, really smart, as they say, by using our circadian rhythm, by using the natural rhythm, ebb and flow of our body and mind to improve our performance, rather than working so hard. And it's another behavior that I see in my traders. Everybody works really hard. Everybody is really committed to making this trading thing work, but they're working too hard, and that's the problem. So, for example, I was working with a trader in my group to create new habits and to get him prepped for the trading day. And he had, like, I don't know, 20 items on his scorecard to be prepared, which included meditation and breathing exercises and reading some hypnotic piece that he got from a trading coach, doing push-ups, sit-ups, squats, cold showers, you name it. He's had it on his scorecard. And then after, I let him have it on his scorecard, right? I never judge in advance. I let the trader create what they want to create, and then a week later we check in and compare how much they were able to create, or how much they were able to make it useful. And it turned out that this trader sent me an email well before our session. He's like, I can't believe, I always thought that I'm really disciplined, and I can't believe how little I was able to tick off on my scorecard. It was like a real eye opener for him. And that's the power of keeping journaling. That's the power of keeping score, because our self image and what we think we do is most of the time, in 99% of the cases, not an accurate representation of what we really do in life. And so it was this massive wake up call for him. And then I looked at his scorecard and asked him, so for what purpose do you have all these activities? And he said, well, so that I can be a better trader. And his belief was that he has to do all these things so that he can perform in the market. So all of these activities in his mind were necessary for him to be calm and focused, cool and collected. All these things that we hear, all these traits that we hear on Twitter and social media, a trader has to have. Now, the really interesting part is that most of my six-figure traders a month, and more like the really big traders, none of them meditates. None of them eats vegetarian. They drink, they eat, they just live a normal life. Some of them choose to meditate, but not to improve their trading, just because they love meditation, and they think it's a great addition, a great supportive um, activity for their well-being and happiness. Now, when we have these beliefs about I have to do all these activities so that I can be successful, that shows me that this trader actually doesn't really believe that they can be successful, because the knowledge to succeed, the belief to succeed, has to be from the internal world. It can't be something that you create on the outside world. Now, does meditation and cold showers and Wim Hof breathing, etc., can that accelerate what you already do and improve your performance? Absolutely. Like, I love these things. Right? So after learning from Professor Huberman how important it is to um, to to expose your eyes to the sunlight early in the morning, I do that. So the blue and yellow lights of the morning, I do that every morning. I go out into the backyard, look into the sky and do my Wim Hof breathing exercise. But I also know if I wouldn't do it, I could still trade, right? I could still perform in trading. So it's not something that needs to be done. So I don't stuff up my trading, right? That's the really big difference. Um, when so then we looked at his life in general, and it turned out that he had this behavior that he always felt like he needs to prove that he can do it, and he would in many areas of life overcommit and then not keep his promises. And then when we do that, right, when we overcommit and don't keep our promises, that makes us feel bad. That makes us feel like we have failed. That makes us feel like we can't be trusted. That dents our confidence. And this is so much more concerning for me, because if you feel unconsciously you can't be trusted, and if you feel unconsciously that um, you're not your word, you let yourself down, you let other people down, then that will have an impact and effect on your trading. That will have an impact and will cause you maybe over trading, going on tilt, because then the anxiety kicks in. So just to give you again an overview, it is not what you do and how much you do that helps you to succeed in trading. It really comes down to skill, and having someone like Anka and all the other amazing presenters here, learn from them. And
Hey, Mandi, are you there? I think we might have lost her. So everyone in the room, can you still hear me? Yeah, looks like she's disconnected.
yeah, my wonderful internet. I'm back. I'm now connected through my phone.
Okay.
So I that should be stable now. Apologies, it's been quite a roller coaster ride with my internet last 2 weeks. All right, so the to get back, what is really, really important for you guys to note is when you make a promise, when you create a scorecard and you don't tick everything off, then you will experience a then you will experience that you can't be trusted, and it will have an impact on your ability to be confident in your trading. So what I then did with my trader, I said, take everything off your scorecard. All I want you to do is, so he's in the UK and he trades the FTSE. So I said to him, I want you to do is every evening prepare for your next trading day, because he would do that in the morning. He wouldn't do it in the evening. And I said, and do it in the evening now. Do your analysis, your preparation in the evening, because now what we know from Professor Huberman is when we learn, when we study, when we look at the markets, the brain and the unconscious, everything, neurological pathways, whatever is going on in our brain, is working and processing and helping us then the next day to perform better. So you can see it's not about how much you put on your scorecard. It's about being smart with the timing when you do what, and then doing one thing properly. Just doing this one change of behavior, preparing in the evening instead of preparing in the morning, he already improved tremendously, and it took the pressure off. Right, it took the pressure off him, and he didn't overcommit anymore, and he could trust himself, because doing this one activity, he knew he could do that. So what he did essentially was he set himself up for failure because he put up so much. And I see that over and over again when I start working with my traders on their journaling, on their scorecards, on their market reviews. They put far too much effort in and and then set themselves up for failure. I rather have you guys do one thing and do it really, really well. So now that this behavior became like it became a habit, and he doesn't need to consciously say, hey, you need to sit down now and do your analysis. It's like, yeah, he can't wait to do it. Now we can add the next behavior, right? So step by step, set yourself up for success. Take your time. This is a marathon and not a sprint. On the flip side, so when he couldn't trust himself, that also had an impact on his self-image. So his self-image was someone not to be trusted. And how do I know what someone's self-image is? When I ask them about their self-talk, especially after a lousy trade. And the market being so volatile, I found that a lot of traders, and it's based on the emails that I get and the conversations that I have with my traders, is that they miss trades. So a very common occurrence was one trader um, setting up his plan, doing his analysis. The trade was executed, so the entry was triggered, and then the price accelerated really, really fast. And the trader didn't get onto the trade because he second guessed himself and all the beautiful things that we do when you don't get into a trade, right? The self talk that we have. And then that could have been a four-figure profitable trade, right? It was a really good trade. It was based on a 1 minute chart. It was a rebound. And so this trader then started talking to himself really, really dirty. What's wrong with you? Why can't you make it? Um, you always do that. The trade was clearly there. Why didn't you take it? Now, part, this type of self-talk is not useful, is it? Now, I would love for you guys to share with me in the chat and to make it really interactive so I can help you even better. What is the type of self talk that you have after you missed the trade or after you didn't get out of the trade when it was in profit and then it turned into a loss and you know better, your exit was triggered but you didn't get out? What is that you say to yourself? When we start writing down our self talk, then that gives us a really clear insight into our self image. Yeah, arc and swearing. Thanks, Tony. Um, what is it that you would say to yourself about yourself, and what feelings come with that? Now, the more you guys can share here, the deeper we can go, and the more useful and um, the more helpful this conversation can be. So, for example, I collected a few sentences from from my traders last week, and then it's something like, I really don't deserve it to be successful. So that was after digging deep, right? I really don't deserve it to be successful. And I said, okay, so let's have a look at what that means. Because what traders do is they have all the self-talk going on, running around in their head, but they don't do anything with it. Sort this out, you muppet. Exactly. Thanks, Tony. Um, when you leave it at that, sort this out, you muppet. You really don't deserve it. I don't know what I'm doing. I should just give up. I feel like an idiot. I feel like I'm choosing to fail. Awesome. Thanks, guys. When will I learn to be disciplined? Oh, you guys rock. Thank you so much. Yeah. You know, one trader said, I say to myself, you're a total fuck up. um, we use the F word a lot when we talk to ourselves, right? So all these words, all these sentences, this kind of self-talk is pushing us deeper into the quicksand, making us feel even worse, rather than helping us to improve our performance. And we could go into all kinds of reasons why we do it, and there will be a reason for you why you did it based on the conditioning that you experienced as a child. And then I usually, as the next step, I would investigate with you what is it specifically that you're upset about. So I was working with a trader last night, and he's just an awesome guy, really awesome trader, and he has he's an American guy, and he has a Marines background, I believe, and I believe it's called Marine, right? Here in Australia, it's called the Navy. In America, the Marine. And so he would be in a Mr. Discipline, right? Having been a soldier, that's what we would think. And when I dug deeper with him, what he was really upset about, which he wasn't aware even, he thought he was upset about having left money on the table, not having taken that trade, having missed out. But what it was he said that he's going to take the trade and he didn't take it. So he was upset about not keeping his word, not doing what he said he would. And he wasn't even aware of it, right? So that completely changes now the dynamics, completely changes now what we need to work on. Because if you have an unconscious rule, which was the case for him, I have to be disciplined in the context of I have to do what I'm saying, then it's a very different conversation than someone who is upset about having lost money and having the fear of going bankrupt or having the fear of being reprimanded because there was a lot of money mindset limiting beliefs in the family. Because how I shared yesterday, another trader I worked with from Latin America, his family was really well off, and they lost everything due to government corruption, as much as I can say. So it wasn't their own fault. It was something, it was an external event that threw them into poverty, and they had no power and control over it. So for him, not following his plan and losing is all about the losing money problem. Right? So that's why it's so important that you write down all these thoughts and all the feelings that come with it so that you can pinpoint what specifically about your lousy trading performance you're upset about. Revenge trading is not the same for everyone. Going on tilt is not the same for everyone. Not pulling the trigger is not the same for everyone. Micromanaging your trades is not the same for everyone. Yeah, it will be the same behavior, but the trigger and the context around it is the difference that makes a difference, where we then can help you guys to improve. So with this trader who said, I don't deserve this, what most people do, and also was really interesting to see that in my group, so everybody rushed to say, yes, you deserve this, yes, you can do it, this positive and reinforcement, come on, pull yourself up by your bootstraps and just do it. It doesn't help, right? It doesn't help to say these things, because deep down, the I don't deserve it is still smoldering, right? It's still eating away on us. So I said to him, okay, you don't deserve it. Trust your unconscious and assume and believe that you don't deserve it. And he was really taken aback by me saying this. And I said to him, his name is Michael. I said, Michael, you don't deserve it. And he was shocked, because to hear it from me was very different than to hear it in his own mind, in his own head. So when you write down these thoughts that you have, get someone to read it out to you. So Tony, I would love for you to just listen to me intently. So I'm going to swear, and I hope it's okay for you guys. It's just because Tony put some swear words that I have to interpret into into the chat. Yeah. So Tony, you're a fucking idiot. Sort this out, you muppet. Now feel what it's like coming from me compared to coming from you. That would be a very different experience. Cat, cat, you should know what you're doing by now. Just give up, you're an idiot. It's like you're choosing to fail. It's like you don't really want it. Danny, Danny, when will you learn to be disciplined? What's wrong with you? I so feel it what it's like when someone else says that to you, because it's a very different neurological experience. And so then I looked at Michael and I said, so Michael, you don't deserve it. Tell me why. And he didn't know why. He couldn't really tell me anything. And I said to him, did you ever do something that you feel regret about, that you feel guilty about, that you feel ashamed about? And he said, yeah, I did. Yeah, so did I. I think everyone in this world has done things that we are not proud of. I certainly have, guys. Like there's so many regrets that I have in my life where I behaved in a way that I'm not proud of. It was, looking back, never out of malice where I wanted to hurt someone intentionally, but where I just didn't know better, where I had to go through this experience and screw up and hurt someone so that I could learn from it and do things differently. And isn't it that the person that we were then when we did these mistakes, even if we knowingly did them, but we couldn't help ourselves, like someone being addicted to drugs, and they know the impact it has on their family. I'm saying that because I'm working with a trader right now who has this experience. They know it impacts their family and they want to stop it, but they can't seem to be able to stop it. And to say then, I'm doing everything to work through this, or if it is something in the past, to say, that was the person that I was then. Today I know better, and I'm not the same person anymore. The person I was in the past is not the person that I am now. So yes, I screwed up, but just because of that doesn't mean that I don't deserve it. And when we work through this, when we really confronted this self-talk rather than avoiding it and making it all feel all making him feel better and not wanting him to hurt, because that was the response in the group, right? So when he said, I don't deserve it, and I challenged him on this, everybody in the group was typing in the chat, oh no, you do deserve it, you're amazing, you always help everyone, and you're an amazing trader. And it's like, no, listen to him. No matter what you say, no matter what anyone says, all he can hear is, you don't deserve it, because he felt embarrassed and ashamed about something that he had done. The moment we confronted it, it healed. So we say in coaching, you need to feel to heal. You need to go through these in order to bring those feelings out so that they can disappear out of your life. And I call those feelings, those unconscious feelings of shame and guilt and regret, I call them, I forgot the word. I called them, oh my God, I can't believe I forgot the word. David, help me, please. How do you call these um, people who have pointy teeth and suck blood?
Vampires.
Oh, vampires.
Vampires. Thank you, guys. In my defense, it's 8:15 and I had a really late night trading. So I call these feelings vampires because they lurk in the dark in our unconscious and they don't want to come out because they know that when they come to the sunlight, when they come to the surface, they fall into dust and the wind blows them away. And it's the same with those feelings um, that lurk in our deep down in our unconscious. The moment we brought his I don't deserve it to the surface, put it on the table and looked at it, and he could find peace in it. It was like the vampire just dissolving into dust and being blown away by the wind. It was physically gone from his experience. And that's the power of your self-talk. When you have the self-talk, I really want you to be to listen to it. So the other self-talk he had was something along those lines. Let me see, because I wrote it all down. He said, I'm a fraud. I said, right, so let's have a look. Where are you being a fraud? Trust your unconscious. If you say you're a fraud, you will be a fraud somewhere. Let's confront it. And it turned out that he actually didn't prepare as well as he could have. That he knew what to do, but So I always say go on live market replay and retrade your trade. That is very different than doing backtesting on a chart that has already been unfolded. You already know the future, the moving averages or whichever indicator you're using have already caught up. So it's not the same visual representation than on a live market replay where the market unfolds bar by bar, and you can look at what was it that I saw in that moment that made me pull the trigger. He didn't do enough of live market replay. He would rather spend the time feeling bad about himself and being down and out and you know engaging in not supportive behaviors. So I said to him, yes, you actually are a fraud if you call yourself a trader and you don't do the basic preparation. You don't do the basic work after the market is closed. So I have one trader who is an extraordinary trader, and uh, she every day after market close, she spends 1 hour on live market replay, either retrading the trades that she didn't do so well, or retrading the trades that she knows she could have done better, or trading trades that some of the people, the traders that we know do extremely well, have posted on Twitter, and trying to retrade them, understanding what they saw. She deserves her success. Success is not by accident. She does what it takes to succeed. You don't need to spend a lot of work on succeeding. You just need to know the one or two things that make all the difference in your trading. And again, I see that with so many traders. Like one trader, he listens to all the podcasts he can find, but he doesn't take one piece of information and implement it. So the podcast, yeah, he's a wealth of knowledge. He could have a PhD in trading, but he doesn't activate it. He doesn't apply it. So it's worth nothing. Also, what I implemented with him now is that he is only allowed to listen to podcasts that are relevant to his performance improvement. So if his challenge is money management and risk management, because let's say he, at the moment, with the volatility of the market, what he experienced was that he got taken out too quickly. And then we all know get taken out, and then the trade continues in the direction because the volatility is just crazy at the moment. So he needed to learn to adapt his money and risk management. And I said to him, now go find podcasts who talk about money and risk management. That's all you do. Don't just listen to any podcast. So you can see when you become intentional with your work, when you become intentional with what do I need to improve, then you will be on the fast track to success, as we say so dramatically. So, Kat, when you say I feel like an idiot, I would encourage you to say to look into where do you actually behave like an idiot, because I'm pretty sure you would. And it's not a judgment; it's just trust your unconscious because it's in our blind spot, and then say, "Wow, I really behaved like an idiot here. This is not who I want to be. I'm going to change that." But if we try to avoid it, if we just stay stuck in that self talk, we don't need to do anything about it. And so it's kind of what we call a safe problem. The risky problem would confronting the, okay, so where do I behave like an idiot? The safe problem is just keeping stuck in that feeling and not confronting what maybe is a reality or maybe not, because you might even find out that you're not an idiot in this one area, that you thought you were an idiot. So the trader that I was working with yesterday, he, let me just see my notes. So what happened to him was he traded for an hour. So he trades the DAX open and did really well. And then he said to himself, I'm going to take a break now to replenish my mental capital. As he said that, he was just doing something on the computer, another trade set up, and he was talking himself out to take the trade. And of course, it went to Mount Everest, right? It would have been a really good trade. Then he had this pinch of regret. He was um, getting frustrated. So he says, I didn't take that setup. I was sitting here talking myself out of it. I get frustrated about myself, and another few angry words. Why do I always talk myself out? And then when we looked deeper into the dynamics of what happened was that he said he's going to stop to replenish his mental capital. So he was actually true to his first promise to himself, not trading. But then when the trade set up, he forgot all about it. He unconsciously was still true to the promise that he made to himself to not trade for another half an hour until he has recovered and replenished. But he forgot about this. He got all angry about not taking this trade. And it was in his blind spot. So he felt like an idiot. He felt like a failure and all the feelings that he had. When I showed him, no, you said you're not going to trade. You are actually to be congratulated and rewarded, and you should be really proud of yourself because you were being your word to yourself. It completely changed it. He didn't feel like a failure anymore. He was actually proud that he is the man of his word. So please, I invite you to investigate why you feel, why you say these things, and if there is any truth to it or not. Um, let me see. And what was really interesting with the trader called Michael was, so this was his sequence of self-talk. I don't deserve it. You should be lucky to have, you should be happy to have what you have. I am a fraud. You are not, I can't read my writing. You are not cut out to do this. So you can see I, you. What that told me and what I investigated and with him before I made this assumption, every time he said I, that was his self-image. Every time he said you, this is something that his parents said to him growing up. That was just his conditioning. It wasn't him. It is so interesting. And then we can start discarding between the programming that we experienced as a child. We all did, right? Everybody did. And we can start distinguishing between our own self-image because they have to be dealt differently. They have to be resolved differently. They're different type of vampires. Okay. So, yeah, so I hope this is useful. That's a useful tool for you guys. You don't need to journal and write stories. Be to the point. Really stick with what did I feel, what did I think, how do I want to feel, how do I want to think. Maybe one more point. The trader I was working with yesterday, he also keeps his journaling, and so he had this one column for the traits, another column for what he did wrong. And he uses the word should a lot. I should have done this differently. And I said every time you use the word should, you relive your past. You stay stuck in the past. And you push yourself deeper into the quicksand. You will not succeed. So change the word should to next time I will. Create a new future. And know that the person you were in today's trading session is the past you. The person you are in tomorrow's trading session is the future you who can change. And we have learned from Professor Huberman's work and many other neuroscientists' work that we are able to change our brain. We are able to change our behaviors. It is ingrained in our biology to change. So that's really good news. Right now, we just need to know how to make use of how the body changes naturally, um, and we can do it. So the column that I asked him to add to his trading journal was, how will I manage that trade differently next time? One column was so he was one who was in profit. So I was in profit, and then a few swear words in between me swear word, let it run into a loss. $1,500 profit into a $500 loss. Really angry and frustrated. And then the next column that we then created was, how will you manage that differently? And we looked at where was his exit. And it turned out that his exit wasn't really clearly defined on that kind of trade. And so we sat down together and we looked at different, no, there is no visual, Michael. And so there was a different, for this setup that he was trading, he needed to adjust his exit strategy. And this is really what screwed his trade, because his exit strategy wasn't clear enough. And after we found and adjusted his exit strategy, he felt at peace. He didn't feel angry anymore. So because he knew he got his learning. So I hope this is useful, guys. And I would really love to open up questions now and have a chat with Anka as well. Hello, Anka.
Hey, Mandi. Hey, everyone. I hope you guys are enjoying Mandi's talk here. It is so true. When I first started trading, I had a mentor that said that, all of us have like a little angel on the right shoulder and a little devil on the left shoulder. And it's about, your battle with these two little guys that are sitting on your shoulder every time when you try to get into a trade. The little angel is telling you, hey, you have to wait and be patient and wait for the trade to come to you. And the little devil says, hey, I could chase it here for a little profit. So it's always finding balance in your trading. And I found it fascinating because it's so true. Everything that Mandi said here, it is so true. And we all go through the same emotions. So don't think that even professional traders or even hedge funds do not go through these emotions. You guys probably know what happened with GME, a couple of weeks ago, and when Melvin Capital went under. I think that they are in the process of filing, if they have not filed already, for bankruptcy. And they were very stubborn. They actually lacked, self-discipline in trading. And what they did is exactly what Mandi said. They were doing revenge trading, and they kept on adding and adding and adding to a losing trade. And you can see right now that there are other hedge funds right now that are hopping to the long side. So it's not only the Reddit guys. So bottom line is that they have not listened to their plan, and they have lost billions of dollars, and billions of dollars. These are basically, your money. If you had hired a professional institutional trader, a hedge fund, to trade your money, now you would be in a huge hole because of his mistake. That's why it's so important to learn how to trade and manage your money. It happened. So this is not the first time around when it happened. So self-discipline and, basically what you need to do is, like Mandi said, take a deep breath, and auto-evaluate yourself and have that positive attitude, but at the same time, respect your plan. So correct me if I'm wrong, Mandi.
No, exactly. And that shows your vast experience and knowledge as well, because anyone who has been through trading has gone through what traders shared with us, and then we get out through on the other side and we can see it clearly, can't we?
Exactly.
So it's exactly how you said it. It's and with the hedge fund that went under, what a really, really big part of that would have been stubbornness and I don't want to call it male ego, but like I'm going to show you, you can't break me attitude, which is completely normal, right? The fighting back attitude.
Exactly.
Because I was working with a guy who was an institutional trader in New York, and he was fighting the market going up. He's a fundamental trader, and he said, according to my fundamentals, the market should go down. So that was in, I think, in December when I was working with him. I can't remember. It was last year. Was it?
Oh.
I can't remember.
Yeah.
Right? It's
yeah.
So I was working with him, and he was fighting the, the GME and the AMC. I'm not so across the American stocks, but the whole Reddit wave. He was like, that doesn't make sense to me. So he was, loss after loss after loss fighting the market. And then I said to him, fundamentals don't work right now. Like, you're so much more
Yeah.
skilled than I am, but they don't work. They don't reflect the markets at the moment. It's the new social media world that reflects the markets. Go onto that analysis. And so he had a chat with his trading desk manager because, they can't just change as they want to. It's a little bit more complicated when you work in an institution. And his trading desk manager supported him, and so he jumped onto GMC and rode the wave up
Mm-hmm.
and did really well. So what was going on for him was, damn it, I'm highly educated. I have an MBA in I don't know what, right? I know mathematics, I know options, and then there's these punks who don't know anything, who are still living with their moms and they're doing better than I do. That's not okay. So he was trying to force it and trying to prove to them that they don't know, even though, right, no one knows each other. We are all sitting behind our computers, but this is what's going on internally. When he gave that up, that needing to prove that he knows better, and he really looked at what is going on in the world right now, that completely shifted for him, and he went back on his horse and performed well again. Yeah,
It's true.
fundamentals did not work for a while. They will work again.
They work. They work. This market is not the market that was 5 years ago. That was 25 years ago.
Yeah.
That was 30 years ago. That was even
Yeah.
last year. So the market environment is changing so fast. We're seeing the effects of social media. We're seeing the effects of different groups, even chat rooms in some cases, or subs. So all of these, let's say, elements are influencing the market. This is not the market that I traded even 2 years ago.
Yeah.
This is a totally different market. Basically, it's the same market. It's only a fast-paced. The rotations are happening way faster because of the boost that stocks are getting, futures are getting from these different groups when when they're getting in. I mean, I'm noticing, even, when I'm running the trading room, and, when we're getting in something, or, we're trying to identify exit points. I mean, we could definitely see changes in the structure of the market. I mean, just think about it. If you're a group of 200 people or 250 people, and if you only buy one contract of, I don't know, of an index, and if you're trading it, for example, later in the day around 11 o'clock, or 11:30, when the volume dims down a little bit, you could see a little pop into the market. So you can definitely see a little bit of change in structure on the smaller time frames. Because the average volume on a 1 minute chart and on a 1 minute bar around that time is about 1,500 contracts. So if you're getting, for example, like 500 of them, and if that corresponds with a technical level, then you're going to see a boost in price. So there are a lot of things that are moving the market right now. The market has changed substantially since 2018. I don't know how long have you guys been trading, but in September 2018, they were testing some new algos, and they were testing them in the market in Europe in 2018 in spring, and they brought the algos, after testing them for about 6 months. They brought them here in the US, they implemented them, and guess what? We had the biggest volatility that we've seen since 2008. And that was in 2018 without any kind of economic reason or fundamental reason. And we saw a lot of selling, massive selling underway. So things change. Let me see if I can show you so you can see what I'm talking about here with
That would be
that
really
volatility.
interesting. And Anka, I love that you share this, because for a lot of traders, who feel they have mindset issues. It is
Mhm.
also a lot of lack of skill.
Yes.
And this is so valuable because, or lack of insight as well, because I didn't know about those algos. All I knew
Mhm.
was like, swear word, my system is not working anymore, and I need to adjust.
Right.
What's going on? Like panic.
Right.
If I had
Right.
known that these algos were being implemented, I stop sharing so you can share.
Oh, okay. Thanks. Okay, cool. All right.
But if
So
I
let
had
me start.
known, yeah, if I had known that
Okay,
these
just one second.
algos were implemented, I would have had peace of mind. I would like, yeah, okay, algos, I need to change. What do the algos do?
I know,
Now I can adjust
exactly.
according. Yeah, that's
Exactly.
the power of.
Yeah.
Go for it.
Yeah, so you do have to have, at this point, you do have to have a lot of friends, and you do have to have a lot of acquaintances that are,
Yeah.
working in this domain in order to find these things out. Because everybody was wondering, wow, there's a huge shift. We don't see any reason why the market should go down. I mean, we went literally parabolic from 2016. We rode into 2017, and all of a sudden the market started to shake. In February. So this was very odd. So this is a chart of the, let's see. Okay, SPX, hold on just a second, SPX. All right, here we go. Okay, here's a chart of the SPX. All right, so here's, okay, you can see that I already have notations here.
Yeah.
Okay, so here is 2018. Now, you guys know technical pattern. This is July 2016. This was a massive range that we had in the market, and actually, in March 2016 was the date where most of the NASDAQ stocks exploded. I'm talking about NVIDIA, I'm talking about Amazon, I'm talking about Apple. So if you have the time, go back to your charts and look at this date that I'm telling you, oil stocks. Everything that was energy related, everything that was tech related, they exploded in a big way. It was on March 2nd or 3rd in 2016, and they never looked back from that point. And I'm talking NVIDIA, like I said, even Facebook, Amazon, Netflix, all of these Apple big tech stocks, that was the starting point. So when you see anything that is developed as a range bound market, whether it's futures, commodities, whether you're seeing a stock or whatever it is a buying opportunity. And NVIDIA at that point and that was a huge investment point, because this is a very long time frame. This is a monthly chart. So that was a really, and Microsoft as well, Microsoft buying point at this level. So this is a buying point, because the longer the consolidation onto a really high time frame would suggest a massive breakout to the upside, massive breakout to the upside, which happened because the breakout happened in July, and we had obviously the pullback into election, right? Because the market doesn't like uncertainty. And then you had the parabolic. So the market loved this, the fact that we were outside of the election cycle, because the market truly doesn't really care who is president. Believe me, the market doesn't care. If you guys recall, there were some rumors that said, okay, if Trump is going to win, the market is going to implode. If Hillary's going to win, the market is going to implode, or the other way around, they're going to go higher. It doesn't matter. It's about this time around, it's about fundamentals. And it's about valuation. Is there devaluation in the market? No, there's not. Is Apple devaluated? Is Amazon devaluated? No. So you're seeing some powerhouses that are not devaluated. These are the players that are bringing the market higher or lower. So because there is no devaluation, there's no reason to think like bullish or bearish. Pullbacks, yes, they happen all the time. So to get back into this retracement that we had here, this is the time when they introduced the new algos in London. So most of the actions that happened through February and March happened in the London session. So there were really sharp retracements. We would see 200 points down in NASDAQ. We would see like huge pullbacks and huge gap downs in the SPYs or the Qs at the open, at the New York trading session open. And that's because they try to find the balance here. And once they brought them, you know, it's kind of like getting a vaccine. So you get a vaccine and of course your body reacts to it. Sometimes you can get fever, sometimes you feel chills, you feel like you're getting a cold because you're calibrating your body the same way the market calibrates itself. So this was the calibration cycle. And then everything started to work in sync. The market became immune, right? So they learned their new game. And guess what? This is when they introduced the algos. It was the end of September. You can see that the end of September closed a little lower. We had a little dip here. And then October, it was actually one of the worst times to bring something to the market because October by nature is one of the most volatile months of the year. It's actually the crappiest month to trade, whether day trading or swing trading, and it lives to its potential every October. So if you want to go on vacation, go in October because that's a really good time to stay away from the market. And then let's try to calibrate here. We had some technicals. We had a double bottom support spot here. And then we actually dipped into December, but something very awesome happened into December. And let me see if I could go into a weekly chart. So we can go back here into this spot. So what happened is, look at this congestion here. We finally got the breakdown, you know, hell broke loose and we came into the 200 SMA. I only use very simple indicators here. I don't use sophisticated indicators. I'm literally old school when it comes to indicators. And here we had the bottom. We actually went long most of the stocks that we were in on the 26th, so right after Christmas. So Christmas, when nobody was expecting, nobody was, you know, looking or seeing anything because they were on holidays. On December 26th, when the market opened, it actually did a rotation on the daily. And shortly after the following week on December 31st, you could see it right here, it started to rally. And this was the starting point of this rally that actually came in and pretty much, I wouldn't say that it ended, right? But it came into the pandemic, right? And this is a black swan event. But take a look how technical this is. So because of the volatility, the price dig deeper into the support spot, but it never failed. It came in, double bottom and rotated. And this is a pandemic. So it was very technical. We bought with both hands right off these bottoms right here, bought with both hands. So now from the pandemic, what are we seeing? Every single time when the price starts to trend and starts to rally, you're seeing that the price is trying to get hooked into some kind of moving average that is identifiable by hedge funds, is identifiable by lots of retail traders, right? Because they do make a lot of proportion in the market right now. So once the price got above this 20 SMA, you could see here that it tried to hold this 10 EMA for the longest time. It went up, it got a bubble of air. Think about it when it was trading at 31.93, it got a huge bubble of air. Every single time when the price gets extended from any of these 3 moving averages or 4 moving averages, these moving averages are acting like a magnet. They pull the price back. So it's so fun to trade with them. I trade with them every single day because I day trade futures every day and I love doing it. And I had so much fun in the market. It was a roller coaster, but it's so fun because when the markets are fast and when the markets are dipping, you know, through levels that you actually, and I do have some examples in my presentation that is going to start probably in 15 minutes. It's really fun to trade because you're looking at technicals. You don't have to worry about anything. Don't have your CNBC, Bloomberg, or whatever on. Just mute everything on and be in the zone. Just like Mandi said, just be in the zone with you can do this. You're not smarter. You're not, I mean, listen, you can actually be smarter than Melvin Capital that lost their money. We are smarter than they are. They were basing their decisions on the fact that they have a lot of money. But we can do it better. We can outperform any hedge fund Trust me on this, we can. So when we came back in here, we navigated off the 10 exponential moving average. Remember, take a look at the price right here. Who do you think wants to be a buyer at 35.80? Nobody, right? So that's why do you think nobody wants to be a buyer here? Well, it's so extended from the 10 EMA, so extended from the 20, so extended to the 50. Now, remember, 50 is a really slow moving average. It usually reacts better when it's trading off the daily charts. So definitely not, these are weekly charts. So once we regain the 20 SMA, and 20 SMA is, I would say, a healthier retracement. Okay, so once we, and of course, you need to have the technical pattern. Remember, nothing happens if you have only one candle or two candles. You need to have anything, and use fib numbers here. You need to have 3, 5, or 8. These are fib numbers. You need to have a 3-bar retracement. If you know how to count a 3, if you know how to count to 5, or if you know how to count 8, you know how to trade. It's that easy. I promise you. It's not hard. Don't overcomplicate it, because usually you're getting a pullback that is into this fib sequence. So you get 1, 2, 3, 4. You're getting the 5 rotation back up. You're getting 1, 2, 3. You're getting the market back up. So now take a look at where we are right now. We have 1, 2, 3. Okay, the trading session has closed. What do you think is going to happen right now, since you have this, and if you want to keep this, for example, well, we still have one more day, but it's going to be very definitive, because if we're going to get an inside day tomorrow, that means that the price action is going to trade within today's price action, because today we had a huge balance, right? And we had a huge range. If we're getting an inside day, the next candle that is going to form on the daily, I'm going to go in on the daily in a second, it's going to be bullish above, bearish below. Boom, that's it. So no thinking, no overthinking when it comes to pattern. So what do you think is going to happen for next week? If we trade and if we remain within the current parameters right now, this being this low and this high, we're going to be bullish above or bearish below. On this bearish below, we're going to test the 20 SMA. And then earlier in the week, if we're not going to find a balance here, guess what? We're going to dip lower. And you're going to go by other technicals other than moving averages. You're going to go by prior highs. Prior highs are showing support. So prior highs for minor support spots. Minor support spots are way stronger than major support or any kind of resistance or support or whatever there is, because minor support only forms in ongoing trends. All right, so the trend is going to be intact. So even if you see a 1, 2, 3 down, even on the weekly, guess what? The trend has not changed. And if you're moving onto a daily chart, see how the daily chart, how choppy it is? So we had a chop to the 50 SMA, chop back up. Remember, the 50 SMA is the one moving average that when the price dips into and digs into this 50 SMAs, you're usually having a huge reaction. But today, guess what? We opened right at this 50 SMA. And because we opened, we flurried up and we forced down. You can see the price action reaction. Guess what? The price got weak. The price read it as weakness, because in trending markets, these moving averages show us directional bias, and usually day traders, and not only day traders, but algorithmic traders, they use them. They are using very simple systems. And one of the simplest system is to program your algo based on the moving average, for example, on the daily chart or on the hourly chart. These are the two moving averages that they love to use for their trend positions. So what they do, once the algo is going to hit the 50 SMA, and if it's going to tick above the 50 SMA, it's going to be bullish above. Once the algo reaches the 10 EMA, and if the velocity takes it just a little, like 2 to 3 ticks higher than the 10 EMA, another bullish algo is going to kick in, and it's going to push it to the 20 SMA. If it's going to trade into the 20 SMA and a little bit above the 20 SMA, these pressure points right here, they're going to drag the price higher. Okay, so it's a very simple process. You have to just pay attention to it. It's not complicated. So because we opened, we flurried up, and we traded below, these were the sell algos. But going into tomorrow, this is going to be bullish above 38.44. We're going to be bearish below. Okay, we're going to be bearish below. And if we test this low, watch out, take your fibs out, because we may actually start moving lower. I want to show you something like really cool. Okay, so let's see if we have enough data here. No, we don't. Let me get the other chart up. Hold on just 1 second. All right. Do you guys see the see the charts? See this chart right now? I switched to another chart style here because I didn't have enough data there. Okay. All right. So let me go here onto the monthly and let me give some more room here. Max available. And let me squish. All right. Isn't this chart interesting? Do you guys remember what this was? This was back in 2000. This is the dot-com bubble, right? This is the dot-com bubble. And the price started to move down. We didn't revisit prior lows, but we came in to where? Very close to the 200 SMA. Now we started to roll back up and we went through 05 or 06 and bam, we went to the 08. You guys know what 08 was, right? Was financial bubble, financial crisis, financial bubble. So what happened here? It was into resistance. So the market needed a reason to. So not only that, we had the reason, but the market had the perfect reason for the retracement, right? If you look at the technical pattern, as dramatic as it was, okay, let me just get some lines here. As dramatic as it was nothing else but a range. Okay, so not very complicated. So you have double tops, you have double bottoms. So here into this spot, this is the area where you should have bought with both hands. This is the double bottom, where the double bottom, any kind of rotation off the double bottom will take the price higher, okay? And here we had a nice move up. We had a dip, so we had a pullback buy. We had a dip higher. We revisited. Look at this 200 simple moving average. You cannot make this thing up, okay? And then we rotated back up. If you remember here, we had some issues with Greece at that time. That was I think it was defaulting, and we had Spain defaulting. So this was the whole chop fest right here. But once it went back up right here, so after election, we started to move up. This is the 2019 and higher. But I want to show you something else, how technical this market is, right? So when we're doing some retracements to see longer term where this move may end, right? And what are the profit targets for an investor at this point? Whoops, sorry. Okay, I rushed into the process here. Okay, just to see where the market was predicted to run into. Okay, here we go. All right. So when you look at these technical charts and you're going like, oh yeah, I'm a long-term investor, what is my target? And this is what you do for all of your stocks. That's why any kind of pullback in the market, you just welcome it into your life because it's another buying opportunity. So I was mentioning yesterday that, you know, every single time when you see the market pull back, make a list of the stock that you wish you were in, because this is your second chance to get into these trades. So as you can see here, these are target spots. Okay, so once we broke above this double top formation, this is target 1 into the 1764 in the SPX. This is the target 2 into the 2080. Wide, look at the wide area that we had here, exactly into this collapsing. Remember the 2018, because we talked about the last quarter of the 2018, which on record is massively bullish. The last quarter of the year is always massively bullish. It was not here, but it lived to its potential because on December 26th, we had a mega rally of hundreds of points. And then we had another breakout. This is another double top within a trend. We had another breakout. And guess where the next target is? Okay, the next target in SPX for this year, and possibly we can actually surpass this, is 4,324 area. This is where we are right here. So you can see the moving averages that are fanning out. This is really a true expression of a massive trend continuation. But at the same time, you can see here that nothing goes up forever, parabolic. And basically here you have a bubble of air. So at some point, we're going to try to fill this bubble of air because you could see how distant we are from the 10 EMA. So we need some kind of support. You cannot trade and you cannot get into a trade unless you have some really good support in order to extend higher. So you got to pull back and go higher. So you have to have a really good foundation. So yeah, these are my thoughts on the market. You know, and kind of like with what Mandi said, in sync with what Mandi said, look at it as technical, because we started from the technical standpoint, and I wanted to show you how technical this market is. Have confidence in your technical analysis. That's all there is. It's only 5% fundamental. And when it's fundamental, if you have a stock, for example, like Amazon or like Google, that is, let's say it's reporting earnings and missed earnings, or, you know, had really poor, let's say, numbers, under, let's say the numbers came under the expected, guess what? If that, let's say, gap, because it will produce a gap, let's say if that price is going to fall down, and if it's going to find itself into a relatively good support spot, it's going to get bought with both hands. So even on weak fundamentals, the technicals are going to kick in and they're going to take the price higher. Okay. So yeah, Mandi, let me know if you have anything else to add.
No, that was just really covering everything, and you see it really comes back when you have such conviction and understanding about how this market really moves, and you still don't do what you know,
Mm-hmm.
then it's a mindset issue. But really look at both areas. Do your training and understand these technical aspects or fundamental aspects, whatever you're trading, and understand that we have to adjust to new environments. And I think this is really difficult for traders when they trade on their own, because they doubt themselves first before they doubt the market. I've certainly been there. And as you said, it is so important to have friends who are in the know. There's, you know, I find out a lot of information from my hedge fund clients, friends here in Australia, who information that as a normal retail trader I would just not have. It is absolutely an advantage. And so, yeah, I mean,
and this is not, guys, this is not information that you cannot obtain yourself. Both Mandi and I are on Twitter. On Twitter, you have a lot of hedge fund guys that are there. You can start following
so
them,
generous
ask them
and fair, right?
Yes, absolutely. It's not, it's not something that is not achievable. Just get out there, ask questions. You're always going to find answers if you ask questions. And so what? You know, so what if it doesn't answer if that person is not going to answer your question? I'm pretty sure there are other 20 that will want to answer your question.
And sometimes I know what it's like for me. Like sometimes I don't have time to respond on Twitter, or I don't see response because the Twitter algorithm is just weird. So it could be all kinds of reasons. Now, there's also another really interesting insight, Anka. If you feel weird or whatever you feel when someone doesn't respond, then again, you have to look on the inside and see what is going on for you there. Because if that's a concern for you that someone doesn't respond, that will also show up in your trading as a concern of how will people perceive me. Yeah. Yeah. It's going to be lurking in the unconscious.
That is so true.
Yeah. Everything that we experience in our normal day-to-day life will somehow show up in our trading. Being judgmental of others. Yeah.
It's very hard to detach yourself from whatever's happening with you outside of trading. And, you know, for example, you go walk your dog and you say good morning to a neighbor and your neighbor turns around, that affects you. And when you come in the house, you would laugh, but that will affect the way you will be trading. Or, you know, an exchange of words or something that, oh, I spilled my coffee, or any kind of small detail is going to impact.
Yeah. And knowing that, again, that puts us into the driver's seat, that puts us back into control, because then we can say, hey, this happened this morning, I feel out of balance, I either need to be really careful, or I need to do something first to get myself back into balance. back into getting this uncomfortable feeling out of my psyche.
Mm-hmm.
So work
Oh my
with
gosh,
it.
the psyche. Yeah, psyche is,
Yeah.
I'm telling you guys, 80%. 80%.
Yeah. Wonderful. There's so much we can add to it. I
Oh
could
my
have
goodness.
conversations like that
Yes,
for the rest of the
absolutely.
day.
But I think it's
I
so important. Yeah, Mandy, just 1 second. I think it's,
Mhm.
and I want your comment on this.
Mhm.
I think it's so important, to look every day in the mirror and say, hey, you're a winner and you're going to make money today. And you are the best trader that you can be today. And do that every single day and see how that's going to improve your trading. It is, because you're going to try to find out more details about trading. You're going to try to be the best trader that there is. And self-motivation, I find that it's really powerful and really working. And I've had my days where, a long time ago, that was probably like 15, 16 years ago, when, I was trading and I was trying a new system, and always a bad idea. Always a bad idea. All right. Because you're always looking for the holy grail. And that doesn't work, because I switched from long time frames, from the institutional investing side to the day trading side, because I wanted to generate an income. And I applied, whatever technique I knew, and it was working fine. And suddenly I go like, oh yeah, I could change it around and make my life easier. And I fell into the indicator, and I bought into indicators. I bought into newsrooms and all that stuff. And all I did was like lose for about 3 months. And I remember I was getting up, and that's, Mandy, you can tell, I got up, and as soon as I woke up, I felt like crying. I cried. I was like, I don't want to go and trade anymore. I just hate it. Oh my gosh, trading is not going to work for you if you start the day like that.
Yeah.
I could tell you right off, I did that for 3 months and it didn't work for me. And the moment you start ditching all the new system and say, hey, I've got this, you're going to turn your luck around, because it's also about mentality. It's mostly mentality here.
And that goes back to the conversations we had at the beginning. What is your self-talk? If your self-talk is, I'm such an idiot, I need to sort this out. I feel so bad, I'm chasing my tail. When will I be disciplined? Is not going to help. But to really, and someone is asking, so what else would I say? So this is what you do. You say, I feel like such an idiot. But you know what? I'm going to find a way. Others have made it work. Anka has made it work. I can make it work too. There is a way. There's always a way. I'm going to figure this thing out. So yes, maybe you don't know right now how to, but trust your unconscious that when you start committing to your future and say, I'm going to find a way, there is a way, that the way will present itself. Because we all know now that our brain is like Google. And when you put into the Google engine, you're such an idiot, it will show you all the results in your life where you have been an idiot. But if you put into Google, I'm going to figure that out. What can I do? What do I need to learn? Google will search for what is missing, what's the gap in your trading, and it will present it to you on a silver platter. Whereas if you stay in the what's wrong with me category, like the answers could be there everywhere, and you would not filter them through, you would not see them. And that's the power of our mind. So I'm absolutely with you. Get up every morning. I had a friend years ago, and his name was Bill, and he would do exactly that. Every morning he would get up and he would say, "I'm Bill the billionaire," and like point the finger at him in the mirror. And I thought, yeah, you're such a dick, really. But you know what? He's a billionaire now. Properties here in Australia. And he did, all Tony Robbins, Dr. John Martini. He's done a lot of work on his self development. Really interesting guy. So he came from China to Australia, not speaking a word of English. Was a dishwasher because he couldn't speak English. Learned English. Ended up studying. Became a high consultant at PricewaterhouseCoopers from a dishwasher who couldn't speak English. And then got into property in 2000 and as we all know, properties have gone ballistics all across the world. He's a billionaire now. Build a billionaire. That's the power of self-talk, finding a way. I don't know how to, but I'm figuring it out.
Mm-hmm. Absolutely. And guys, if you think this is, because there are individuals that do not believe in the power of words, you are going to be shocked. I actually have a book that, I read and I love reading, and I have it on my nightstand all the time. And it's empowering. It's called Magic. It puts you in the right mindset of how to attract, winning trades. For me, it's like winning trades, to be the trader extraordinaire. Tell yourself that every single day. It's, if you guys have watched the movie Secret, it's by,
Rhonda Byrne. It's an Australian.
Yes, exactly. Okay. Yeah. That's the book. I'm telling you guys.
You get it for free on Audible, by the way.
You do?
Yeah.
Guys, please. This is a must. If you want to make money, this is your book. You are a billionaire. You guys, all of you guys in here are billionaires. Just look in the mirror, take a quick 2-minute break, go in the bathroom, look in the mirror, and say that. Sure.
Even if you don't believe it, you will.
Exactly.
Now, I have a trader at 9:15 that I need to, I have a coaching session at 9:15, so I need to love you and leave you guys.
Okay. All right. And I'll start my webinar.